Welcome to the latest installment of our All Mutual Corporate Investment Update. My name is Sydney Sekese. I'm part of a team of investment specialists. Our focus is to provide regular updates on the Smooth Bonus portfolios. The quarter ended March 2025 was wrecked with negative sentiments. These sentiments have really meant that the global and local economic environment, as well as markets, are quite uncertain. In the next couple of slides, I will demonstrate how the absolute growth portfolio has navigated these negative sentiments, the agenda items that I'll be covering. And these entail economic and market updates, where we really unpack the environment under which we have been operating. I then delve into how we have navigated the challenging environment that we're currently experiencing through the investment philosophy. I then conclude the presentation by summarizing how we have navigated this challenging period and a few takeaways. The economic and market environment has really been challenging as a result of negative sentiments, and therefore it has impacted on the prospects for economic and market growth. Top of the discussion is the trade wars, especially in the US, which are really threatening consumer confidence. The consumer is quite key in terms of determining the growth prospects across the globe. Fed on the US has also paused amid elevated uncertainty. On the local front, we saw the Reserve Bank MPC also holding on interest rates despite benign inflation outlook. Research has shown that consumer confidence navigated downwards. This is really caused by the potential impact of trade wars on their spending pattern. This further is exacerbated by the inflation outlook, which is spiking higher. Therefore, the Fed in the US will be expected to pause on interest rate cycle. Locally, we saw the Reserve Bank monetary policy, also known as MPC, also holding on interest rate reduction despite benign inflation outlook. The vote was between 4 and 2 committee members. This indicates the level of global risk that is at play. It is expected that the Reserve Bank will continue to be hawkish until there's a sign of certainty. What do we expect in terms of the future outlook? Overall, global growth is steady but unexciting. On the geopolitical front, we're seeing a lot of uncertainty, which is heightened to an escalated level. Locally, inflation is expected to behave well within the Reserve Bank target range. This will provide opportunity for the Reserve Bank to be steady in terms of their monetary policy stance. The growth outlook locally is attractive. We are seeing some green shoots where reforms are currently being implemented, and it is very interesting to see how the Government of National Unity will perform going forward. The markets have experienced a quite significant sell-off, especially the global equities, for the first quarter of this year. This is as a result of the negative sentiments caused mainly by the trade wars. The US bond yields, on the other side, have yielded downwards, on a downward spiral, therefore indicating appetite for a safe haven. The local equities have been boosted by resource shares, as well as the improvement in the environment that we are currently experiencing. Numbers do not lie. The table indicates performance of various indices over the 1 month, 3 months, as well as the long term. The extent of the trade wars has weighed down on consumer confidence and investor sentiments. This has meant that most of the global equities have experienced negative returns for the 1 month ended March 2025. The MSCI World Index, which is commonly used, was severely impacted by the negative sentiments. The local equities, as indicated by the Caps Swiss Index, saw a phenomenal returns of 3.6% for the 1 month, with a 12-month pleasing return of close to 23%. The property asset class disappointed for the 1 month after a very pleasing 2024. However, the 12-month return of 20% remains solid. How have we navigated this challenging environment? I'm now going to unpack how the absolute growth portfolio has performed and provided stability in these challenging times. The starting point is that the underlying portfolio that we manage is well diversified for stability and growth. Secondly, we also aim to achieve inflation plus 6.2% over a long term. To achieve this objective, we have up to 83% exposure to growth assets, and therefore there is a chance that we will be able to meet these objectives. The absolute growth portfolio is well positioned to meet this objective with significant reduction in short-term volatility. This is the philosophy that we follow, where the underlying portfolio that we utilize has got volatile returns, which are transferred into a bonus smoothing reserve, which is a useful tool to smooth the returns so that the outcomes of investors is smoothed over a short to medium term. This ensures that member outcomes are sustainable despite the short-term volatility of the underlying portfolio. Despite the short-term market volatility that we've experienced, both the absolute smooth and absolute stable growth portfolio has declared stable and comforting bonuses month on month. This is as a result of the pace of smoothing that is being applied over the 12-month period, and therefore provides opportunity for inflation-beaten returns over the short to medium term. The bonus smoothing reserve level is used to determine the level of bonuses that we declare month on month. This picture shows the history of the bonus smoothing reserve levels. We are currently sitting at an optimal position, which will ensure that the outcomes of investors is also optimal. We are able to generate positive returns when markets are running, together with mitigating short-term volatility. I have demonstrated that there is a lot of uncertainty in the global and local markets. Questions that are being asked is whether we are headed for a dreaded recession. Could we have a potential bear market or even a crash? The geopolitical environment is also not improving, therefore increasing the level of uncertainty and risks ahead. Our absolute growth portfolio in the form of smooth bonus philosophy mitigates these risks. This is done via a well-positioned bonus smoothing reserve level. Our underlying portfolio is well diversified, and the pace of smoothing ensures that investor and member outcomes continue to be optimal. The Old Mutual absolute growth portfolio is geared to handle the complexities of the current economic and investment landscape. Thank you for listening to me, and we look forward to having you in our next quarter.